the books. This is the current liabilities and non-current liabilities. And first, let's talk about the current liabilities. And normally, current liabilities are presented as follows: accounts payable, short-term borrowing, unearned income, and other accrued liabilities and provisions. And first, we talk accounts payable. Amounts owed to suppliers for goods and services that have provided to the entity on credit are the principal components of accounts payable. Accounts payable, also called creditors. And the next is short-term borrowings. And short-term borrowings means less than 1 year. Working capital loan is a type of short-term borrowing. And this type of short-term loan is made with the expectation that it will be repaid from the collection of accounts receivable that will be generated by the sale of inventory. This short-term loan usually has a maturity date. And next is unearned income. Unearned income, also called income received in advance. It means received now and earned later. For example, our school fees, we pay the money before we start the term. And next is other accrued liabilities. It included payroll taxes and other withholdings, GST obligations, accrued property taxes, accrued expense, income tax payable. And the next is provisions. It means a liability for which the amount of the timing of the future sacrifice of economic benefits that will be made is uncertain, and for this reason is different from other payable. The next is non-current liabilities. In non-current liabilities have two: is long-term borrowings and capital structures. In long-term borrowing, long-term means more than 5 years, and long-term borrowings means for many non-financial firms, this accounts for up to half of the firm's capital structure. And the next is the capital structures. It also called leverages. It means a mix of borrowings and owner's equity that is used to finance the acquisitions of the firm's assets. And that's all. And it's all the current liabilities and non-current liabilities. Thanks.